We have finally gotten the report for the data on new home sales in the United States, and it is far from what we expected. And these reports are so fresh since they were only released on Monday that I want to nickname them the Febreze Brothers. What's up, homies? My name is Matt Lurker, and the U.S. Census Bureau surprised us all the past week by dropping the numbers on all of the relevant data on home sales in the U.S. for the past quarter. And I'll go through and explain the data today, and then let you know how this leads into the 3 things that will finally trigger the market to drop. If you didn't already know, the number of new homes being sold in the US has been declining over the past few months, and that's largely due to the low supply of new homes, which has been caused by higher building costs and the labor shortage. And that totally makes sense, because if the wood being used to build the home costs more and you don't have a lot of people helping you build the house, then there's going to be a shortage of new homes hitting the market. It's the same as if a baker only had half their ovens working and their cost for flour and sugar went up, while at the same time they have less people actually in the shop helping them bake. There's going to be less cookies for everyone, and it's going to suck. And guys, I know that I make cheesy analogies all the time, but if you bother to stop by and check out the video, I would really appreciate it if you all did your part and hit the like button. It takes half a second of your time, and it really does do a lot to help out the channel, especially a small channel like mine. And I don't know if you can tell right now, but I'm actually a little bit sick. I'm getting over a cold, and I don't think there's anything that would actually make me feel better than a bunch of likes and maybe some NyQuil. Probably NyQuil. Anyway, new home sales have been declining over the past few months, but most economists were in agreement that we were going to see growth during June of 2021 in that figure. The expectations were that we would see growth of about 3.5% for the new home sales. And keep in mind, this is only new home sales, so we're only looking at brand new homes here. So that means that we're only going to be looking at things that were built in June of this year. And instead of the expected growth of 3.5%, we're now seeing a decline of 6.6%. And you may not think this number is that big, or maybe it's not even anything to care about, but you can't just dismiss it yet just because it's in the single digits. Because this number isn't just a 6.6% decrease, but it's 10% off from what most economists were expecting. The labor market has been picking back up, and lumber in the futures market has crashed almost 50% from what it was at its peak just a few months ago. And that leads us to think that more people should be buying new homes because the cost of building a new home should be getting cheaper. What we're seeing right now doesn't really line up with that narrative, though. And maybe if you're taking a minute to second guess what this really means, you're probably thinking that this is only going to make the housing situation even worse. Because after all, if there's fewer new home sales, then doesn't that just mean that there's less new homes available for sale? Normally that may be true, but right now that's not the case at all. While new home sales have been decreasing, the supply of new homes available has been rapidly increasing in the background. From a low in January of only a 3.5 month supply of homes for sale, we've now doubled that supply, and we're sitting at 6.5 months worth of available new units. To me, this signals that we've got to see a drop in prices soon, because even though we have more and more homes available for sale, people just aren't buying. And while I've been over here on my channel saying that we're probably going to see a price correction within 6 to 24 months, CNBC is calling it right now. As soon as the new data came out, they published this article saying the housing boom is over as new home sales fall to pandemic low. Check out what they had to say about it here.
But we are looking for a number right around 800,000, and it's a big miss. 676,000. 676,000 seasonally adjusted annualized units. Pre-COVID, we were around 730,000 in February of 20, around 756,000 in January. So now we are dipping below pre-COVID levels, and the high water mark of 993,000 was in January. So you could see that we have fallen, over 30% from that level.
The number of new homes being sold is down to its lowest point since April of 2020, while at the same time, the inventory available has been increasing over the past couple months. And keep in mind that April of 2020 was the beginning of the pandemic, where nobody wanted to sell a home because they didn't want to do business with someone, they didn't want to have anyone else in their home that could get them sick. And so the number compared to April of 2020, that's an incredibly low benchmark. And let me know what you guys think about the market, and if you agree with CNBC when they said that the housing boom is over. It seems to me like we're reaching the tipping point where people are just so priced out that they're choosing not to buy. Even though there's homes on the market, there's existing homes, and there's new homes being built, sales are down. And there's more to it than just these few factors, but at some point, too many buyers are getting priced out of the market, and the market has to come back to a level where the buyers are actually willing to spend their money. The home buying frenzy really hit a peak sometime between January and April of this year, and since then, it seems like things have been cooling off. That doesn't mean that we're going to have a crash though, because if prices were going to come lower, then there'd be plenty of demand to scoop up all that inventory, which would keep the price held pretty constant rather than crashing. And if you look into it further, these extremely high home prices are being artificially propped up by three things: high building costs, low mortgage rates, and government intervention. Like the little cake example earlier, if the cost of production is higher, then those costs get passed on to the consumer through higher prices. No matter what, the contractor is going to make sure that he's making money on this deal. So if his costs to build the home are higher, well then they're going to charge a higher price to complete the job. And even though the price of lumber in the futures market has crashed significantly, the cost of lumber today is still very high, so the cost of building a home is also still very high. Lumber is the material that everyone first thinks of when they think about building a home, but there's a lot more to it than just that. But even all the other materials have been caught up in supply chain bottlenecks all over the world, delaying the entire building process. That's starting to get better, but until the goods start flowing again, there's only so much a contractor can actually do to put together a home. And that's if he can find the labor to help build the house. Although it's cooled down some, the US is definitely still experiencing a labor shortage, which is delaying the building of new homes. Like I just mentioned, the high prices are also still being propped up by some of the cheapest mortgages that have ever been available. When rates are low, it's easier and cheaper to borrow more money. And if a seller knows that you're borrowing money at a lower rate, then they're going to raise the price because they know that you can afford more if you're borrowing money at a lower rate. Not that there's anything necessarily wrong with that on an individual scale. The seller's happy to get more money, and if you're willing to pay that higher price, then you're probably happy to get the home, and everybody wins. If you're not willing to pay the higher price though, and on a larger scale, neither is anyone else, this is where we start to run into problems. And since home prices have been artificially propped up by these super low rates, we're starting to see some problems. While homeowners probably think it's great, a house in a healthy housing market shouldn't be appreciating more than 20% in only 1 year. But last year, in response to all the fear and to get ahead of the economic effects of the pandemic, the Federal Reserve slashed their interest rates to 0%, which helped propel the housing market into one of the fastest growth spurts it's ever seen. What happens when this rate gets brought back up, though? When the Federal Reserve makes it more expensive to borrow money, the markets tend to panic. But this is one of their main tools to fight against inflation, which we're also seeing across the board. Only a month ago, Federal Reserve Chairman Jerome Powell said in a press conference that they were thinking about raising interest rates sooner than they had originally planned, because inflation is actually rising faster than they had previously expected. And even though nothing actually changed on their end, they didn't do anything, they took no action, the stock market dropped in response to this. The markets can be fickle, and as soon as the Federal Reserve raises their interest rates again, mortgage rates will also come back up, which will cause housing prices to drop. Keep in mind, though, that the real estate market is slower to react to good and bad news than the stock market. So on the day that the Federal Reserve announces or just raises their interest rates out of nowhere, don't expect a huge drop right away, but more of like a gradual repricing within the market. Now, the third pillar that's really just propping up the housing market right now is government intervention. And the government is separate from the Federal Reserve, so this is actually different from the point I just made. Again, in response to the pandemic last year, the government put into place eviction protections for those who wouldn't be able to pay their rent on time. And they also put into place foreclosure protections for those who wouldn't be able to make their mortgage payments. And just like all government action, this was good and bad for a number of reasons, but here's where we're at today. We don't have the most accurate numbers, but at least 3.2 million renters said in June that they have had trouble making their payments and that they'll be facing eviction within the next 2 months. Regardless of whether you think that they should be evicted, the protection against eviction ends on July 31st. And a lot of the landlords who've been renting to these people, once they evict some of their tenants, are probably going to want to just get rid of their properties and sell out while the market is still hot. On the homeowner side, the protections against foreclosures are also ending, with 5 million households over the past year having applied for mortgage forbearance, and how many of them will be able to resume payments once these protections are gone. Since anyone could sign up for mortgage forbearance and delay making their payments with essentially no consequences, we have no way of knowing who actually needed that help or who might be facing foreclosure in the near future. The CDC has said, though, that they will not be extending these protections any longer. And when both of these end, we'll be seeing more homes listed on the market, which will help drop the prices from where they're at today. I doubt there will be a massive flood of homes for sale once foreclosures begin again, because that can be a lengthy process that varies state by state. Rather, I think this will be more of a gradual thing as new homes trickle into the market, further increasing the supply. Each one of these three things are still artificially propping up the market, but as each of them are taken away, then the housing market will drop. And unless something severe happens, it's unlikely to be a complete crash, but a correction of 10% is definitely likely, and possibly even 20% depending on if things are really severe, but that seems a little far-fetched for the way things currently look. And while we have a rough idea of when the Fed plans to raise rates again, and we also know when the eviction and foreclosure protections are going to end, it's hard to say when building costs are going to come back down again. If you want to learn more about the housing market though, or more specifically what's going on with lumber, check out one of these videos here. And as always, I love you guys, and I'll catch you next time.